Hi everyone, and welcome to Healthy Wallet. Dividend stocks are a great way to earn passive income and generate reliable returns over the long term. Many investors seek high-yield dividend stocks as they have greater potential to generate better returns over time. Therefore, this video aims at discussing the 7 best dividend stocks that can be bought and held with confidence in the stock markets. We will discuss their use cases and analyze their potential dividends yields in order to help you make informed decisions when investing in these securities. Before we get started, please take a moment to like this video and subscribe to the channel if it's not already done. Number 7, AbbVie Incorporated. When looking for dividend-paying stocks to buy and hold forever, few things are more important than a company's track record of paying and growing its dividend. In this area, pharmaceutical giant AbbVie is among the elite. It is a dividend aristocrat, which means that it is one of the few companies in the S&P 500 to have increased its dividend during at least 25 consecutive years. AbbVie's record is even more impressive, with 50 consecutive years of increasing its dividend. With sales of flagship arthritis drug Humira set to decline due to the loss of patent protection, analysts forecast a 6.7% decline in overall revenue in 2023. That said, the company has other promising drugs on the market, such as the immunological drugs Skyrizi and Rinvoq, whose sales increased by 75.4% and 53.5% respectively in the third quarter of 2022. Number 6, the Coca-Cola Company. Famous for being the favorite of Warren Buffett, who makes it one of the main components of his portfolio at Berkshire Hathaway Incorporated. Coca-Cola is a proven stock. The Atlanta-based beverage and snack giant was founded in 1886, and with one of the most recognized consumer brands on the planet and a loyal customer base, it's hard to imagine a scenario in which KO wouldn't be a dominant world title decades from now. With 60 years of rising dividends, few income stocks are more reliable. You won't get dynamic growth from Coca-Cola. Analysts expect revenue to rise just 3% in 2023, but the company is also incredibly resilient, posting a total return of 10.6% in 2022, a year in which the S&P 500 itself plunged 19.4%. Number 5, Costco Wholesale Corporation. Founded in 1976 and based in the humble town of Issaquah, Washington, Costco has come a long way from its humble roots. Today, Costco is a sprawling $200 billion member warehouse retail company that is the cream of the crop of its industry. His simplistic business model of charging a modest membership fee and selling goods in bulk at close to cost has proven to be incredibly profitable. Those membership fees add up fast, as Cost raised $4.3 billion in dues in the 12 months to November 20, 2022. While the 0.7% dividend yield won't change your life, its annual payout of $3.60 per share has increased ninefold since its launch at 40 cents in 2004. Costco stock is off to a strong start in 2023, rising 5.7% through January 12, following the announcement of a 7.3% increase in same-store sales in December, excluding gasoline and exchange rate fluctuations. Number 4, Johnson & Johnson. The next company is arguably the prototype of all blue-chip dividend stocks, Johnson & Johnson. Buying Johnson & Johnson stock is almost like buying a diversified exchange-traded fund. The company's business is split between 3 divisions: pharmaceuticals, medical devices, and consumer healthcare. Another member of the Dividend Aristocrats Club, like Coca-Cola, Johnson & Johnson has roots that date back to 1886, and its dividend has been growing every year for 6 decades and counting. Mainstream brands include dozens of trusted global names like Benadryl, Listerine, Pepcid, Tylenol, Sudafed, and Band-Aid, to name a few. J&J's pharmaceuticals segment, however, is both the largest of its 3 divisions and the fastest growing 9% in the third quarter of 2022, driven by drugs like Darzalex, Tremfya, and Stelara. Now we are getting into the top 3 of our dividend stocks to buy and hold for the long term. Before we continue our list, I just want to remind you to like the video and subscribe to the channel. It really helped me to get the motivation I need. Number 3, United Parcel Service Incorporated. Based in Atlanta and founded in 1907, UPS is a dominant player in global transportation, logistics, and package delivery. No matter how big the digitalization of the economy is, people will still need raw physical goods to get from point A to point B. The long-standing transport infrastructure and know-how of UPS makes it an established player in an oligopolistic industry with relatively high barriers to entry. Don't let this static and boring industry mislead you. UPS has grown from revenue of $66.6 billion in 2017 to an expected revenue of $101 billion in 2022. Although its final figures for 2022 are not yet known, if analysts' estimates are correct, its earnings per share of $12.92 in 2022 will represent a jump of about 130% from the $5.61 EPS reported in 2017. Trading at less than 15 times earnings, UPS has a payout ratio of just 44%, which leaves plenty of room for future increases. Number 2, PNC Financial Services Group Incorporated. Although its market capitalization of $65 billion makes it the smallest company on this list, regional bank PNC is by no means small. Pittsburgh-based PNC was founded in 1852. It managed to survive and thrive through some of the toughest times in American history, escaping the Civil War, the Great Depression, and many other crashes and recessions that have hampered businesses for the past 170 years. While bank stocks have been battered in 2022 as investors anticipate another recession, PNC should be in great shape if the economy manages to make a soft landing. Even if not, the indefatigable PNC appears to be a safe bet, trading at just over 10x forward earnings despite analyst forecasts of mid-single-digit revenue growth and profits in 2023. Number 1, Cisco Systems Incorporated. Last but not least, the sprawling communications equipment company that provides much of the proverbial plumbing that powers the modern internet and tech world. As a technology stock, the company's history dates back only to 1984. But Cisco has managed to quickly establish itself as an essential part of the global IT infrastructure and, perhaps even more impressively, to stay there. Sure, Cisco won't be breaking any growth records these days. Analysts expect revenue and bottom-line growth to be between 5% and 6% for fiscal 2023, but after the tech sector sells off in 2022, long-term investors have a chance to get into Cisco at reasonable levels. Shares are currently worth less than 14 times earnings, and the company's conservative 54% payout ratio shows earnings could be nearly halved without putting the dividend at risk. This concludes our list of 7 dividend stocks to buy and hold for the long term. As you know, investing in dividend stocks is a great way to generate ongoing passive income and build financial security. With the right strategy and the right stocks, you can create a portfolio that will pay you dividends for years to come. If you're looking for dividend stocks, there are a few things to consider. What are dividend stocks? Dividend stocks are those that give the investors cash distributions from an organization's earnings. They often pay their owners in cash every quarter, but some companies choose to reinvest dividends in order to increase future distributions. Some examples of dividend stocks include Coca-Cola, Intel Corporation, Visa Incorporated, and so on. The dividends that many of these companies pay can be substantial and can provide a significant portion of your investment returns or income over time. Here we are at the end of our video. I really hope you liked it and you found it helpful. As I told you before, don't forget to smash that like button, subscribe to channel and hit that bell to stay updated every time I publish a new video. I'm trying to post 2 to 3 videos per week. So, your support can be a good source of motivation for me. Thank you and see you in the next video.